A lot of people's 401ks are about to be a lot more risky. Trump is preparing to sign an executive order that will essentially clear the way for employer retirement accounts like your 401k to invest in private market investments. What does that mean? Well, right now in your 401k, you likely have a list of investments that you can choose from. And those are all publicly traded investments. So stocks and bonds and mutual funds, things like that. They're traded in public stock exchanges and they're regulated by the SEC and they have what are called disclosure requirements. So they have to publicly post and report things like fees, performance data, and what's in the fund and what can the fund invest in and what can't the fund invest in. Most of these investments have long track records and a lot of publicly available information about them. Private investments are pretty much the opposite of that. They aren't on exchanges, they don't have reporting requirements. It includes stuff like venture capital, real estate funds, leveraged buyouts, all of which are a lot more risky. And these kinds of investments have traditionally been offered to rich people to invest in. In finance, we call these people accredited investors. It's an actual term. And it's really like you have enough money to take risk with, and for the most part, you're working with an investment professional. It's not like these are so advanced that normal people can't understand it. They're just more risky and usually hard to sell once you buy into it, and they don't give you access to all the information. So it's not always clear what you're invested in or how much you're paying in fees or when you can get your money back once you invest in it. And the big asset management companies like Empower and BlackRock are saying we shouldn't deny normal people from reaping the benefits of these amazing investment opportunities. And it's like, since when do you care about normal people? And I think that what they want is to access a huge group of people's entire life savings, which all adds up to $12 trillion, and not have to disclose what fees they're raking in or what they are even invested in. And the counter to this is the fund companies have done some research and they say that these investments have done better than traditional public investments over the last 20 years. But there's also research that says they actually have done worse. And we haven't really seen a huge market crash like we saw in 2008 or a really sustained recession. So it's not clear exactly how these funds would perform during those conditions. And there's a reason why rich people aren't putting their entire life savings in these things. Because they're risky and there's a greater chance that you're going to lose your shirt. So just keep your eyes open on this one and pay attention to changes in your 401k options, because I don't have a really good feeling about the motivation and the strategy behind this one.